Enable.
Hello and welcome to this unique thought leadership forum titled Reimagining Corporate Payments. I'm your host Gautam Srinivasan. I'm of course joined by a galaxy of CFOs from diverse companies, diverse sectors, leading companies, and of course we've got important voices from a policy perspective as well. I'd like to thank all of you for joining us for this forum. So let's quickly start things off by inviting Manoj Adlakar, Senior VP and CEO, American Express Banking Corp India, to address this August gathering.
India currently processes $22 trillion, yes, $22 trillion worth of payments every year. There's been visible buzz about consumer payments-related fintech, innovation in the consumer space, which we keep hearing about day in, day out, that focuses on the individual, but in B2B, or the commercial space, there are many stakeholder interests, and a lot of them are here. Think about the huge implications that automation or technologies could have for the commercial space. American Express, we take a lot of pride in saying that it is a global leader across all commercial payment segments, whether it's small or medium-sized businesses to some of the largest global companies in the world. At a global level, we serve 3.3 million businesses and over 14 million card members in over 200 countries. So, what are we really hearing from stakeholders such as yourself? Emerging trends on corporate payments range from credit capacity to security of data. Security of data is absolutely mission critical to all of us. And importantly, to solutions that are mobile first and are very, very frictionless and easy to use. For businesses, it is about end-to-end payment processing because they're manual, they're costly today. So saving time and saving money in the process become very high priorities. We provide rich access, data, insights, and bring together the network of buyer and supplier relationships, which in turn provide real economic advantage to customers such as yourself. I feel that the role of the CFO has changed over a period of time. But the emerging role, I feel, is far more strategic, far more strategic. CFOs now are fully involved in enabling business strategies and, most importantly, innovating on a day-to-day basis. And I would like to end my exhortation with a reference to an icon, I'm a big fan of his, Roger Federer, with 20 Grand Slam titles. He, importantly, continues to raise the bar. In your own enterprise, you as a CFO would have achieved small or large parts of your goals, but if Indian companies can aggressively move ahead on the path of digital growth, then can we not set the global standard that is applauded by all, just like what the example I gave, which is Roger Federer. We at American Express will be very happy and privileged. It'll be an honor to partner with you and share your growth journey. Thank you. Thank you very much.
Thank you for that, Manoj. Now for the keynote address to this August gathering, it's my privilege to invite Dr. Virmani, former Chief Economic Advisor to the Government of India, to come to the stage and share with us his thoughts on the topic.
What I will do is to speak about my experiences with digital. Basic idea of the UID. The idea was the welfare program. The idea was not as an identity, and the idea was to be able to bring in everybody into the system and to weed out those duplications. The idea was to clean up the databases. You have 250 programs, you have PDS. We must know who are these people, and the only way to make sure is that everybody has a number. What is the advantage of a number? You can process it, okay? So the great thing about the digital is you put it and you know, you have information, okay? Then you can use it. But never forget the design. Question is, what is the objective? If you're going to be successful, and that's the message I wanted to give you, if you're going to be successful, you have to define the overall purpose, the need, which in your particular organization you want to get at. Okay? Thank you.
Dr. Virmani giving the policy perspective case study. Let's get the business case study now. For that, I'd like to invite Saru Kaushal, VP and Country Business Head, Global Commercial Payments, American Express Banking Corp, India. Saru, over to you.
Let me start with an interesting fact. India indeed processed over $22 trillion of payment flows last year. Interestingly enough, to the point of electronification and digitization, only 6% of this was on paper, i.e. checks and demand drafts. And India is pegged in the world order very similarly to all other developed countries. So what are these payments about? These are transactions that are done between corporates, between governments, and between consumers. Removing the inherent inefficiency in a payment ecosystem or a flow is all about driving savings. And why is driving savings important? Because for all of us in this room, it is a boardroom agenda. At Amex, we are partnering with over 3 million companies globally, and these span small companies, mid-sized enterprises, local large market companies, multinational organizations, Fortune 500 organizations, and we endeavor in solving 4 or 5 key things. One is we work alongside them to solve for account payable issues. The second is we work to enable transparency. We work to enable visibility and compliance and drive savings by creating expense management solutions. Another thing we do is work through the account receivable chain. Let me now share with you some real-life examples of how we in American Express have partnered with several companies to deliver on their expense management agenda. I'll take a very recent example. We were talking to a large IT company which had a travel and entertainment budget, typically comprising purchase of airfare, hotels, and dining expenses of $23 million per annum. They needed to set up an offshore unit for new projects. This required investments. However, there was a very clear mandate from the board, which was that please go ahead and win this business. But guess what? Make it happen without increasing the expense base. Well, we worked with the team extremely closely, looked at their process end to end, and we found some ways to save up to $2 million for them. And I'll tell you what those were. One, we identified a large set of employees who were booking last-minute tickets, which are very, very costly. The second gap that we found in this design was there was very little visibility on ticket cancellation. And we were able to actually show them the amount of money they were losing on refunds lying with the airline. So mandating the use of approved suppliers and making sure that there is big data available so that you can negotiate the right price is an empowering tool that comes to you. And this, along with the fact that our tool goes and seamlessly sits on the ERP of the organization and also enables approval hierarchy tracking so that travel approvals do not fall between desks, is what allowed us to actually deliver and show a $2 million savings. I'm now going to take a pause. If you have any questions, I'll be more than happy to answer them.
We would be keen to know about this receivable easy side, because buyer initiative payments, yes, we are aware of. Channel financing, obviously, we all are from finance cycles, so we know. But this MX helping us, is it the same structure like point of sale machines or something different?
No, it's not. So the form factor in a credit card company is only a matter of detail. Please do not visualize a point-of-sale terminal. All of these payments are processed digitally. Think of a computer or a laptop, where you go and in your transaction flow embed an Amex card, and then click to pay. Okay, thank you.
I guess the first question which I'll toss to the CFOs sitting at the round table is, what is your checklist of a perfect customized end-to-end payment solution which spans that entire cash management spectrum, expense management spectrum for your company or industry? Who'd like to take the first shot?
For me, the basic checklist would be that how less of intervention is required in the process, how less of manual intervention, I mean to say, and the ability to have cognitive and everything there so that we are able to audit the transactions.
We are in tie-up with American Express and IOCL, Indian Oil Corporation. Since we have towers spread across the country, there was a huge problem for us to buy diesel in the remote areas in cash. The tripartite arrangement between IOCL, American Express and us, where we are using the IOCL cards. So we replaced cash by using IOCL cards to procure diesel, and with a back-ended payment from American Express flowing to IOCL, and we make payment to American Express. We started with 2 states, and in the last 3 years now we are operating in 20 states through this arrangement, where we have completely done away with buying diesel in cash through this arrangement. So thanks,
made life
American
easier
Express.
for you. So you've got a good case study right there.
In a payable, expense payable and suppliers payable side, my focus would be that I spend my maximum time on value for money side. I mean, pre-negotiation or purchase order placement prior to that activities should be taking my more time. And the least of time I should be taking is after receipt of material.
Okay.
Those should be my least of worries. And maximum should be economizing my purchases, timing my purchases so that I do not over-inventorize. I do not default to my vendors. And at the same time, I do not prepay my suppliers.
At a broad level, I think there is so much of an opportunity. It all gets down to insights. It all gets down to big data. It all gets down to understanding what you're spending on. I think the opportunity comes in ensuring that the processes, which today, maybe they are there in majority of the companies, but wherever there are process gaps, it starts with ensuring that the process gaps are in place, and that is the role of all of us as CFOs to kind of intervene and interject and make, and be there. And the role of American Express as payment service provider is to be there along the journey.
All right, at this stage, let's get in a policy perspective as well. How can regulatory processes be more in sync with the improvements in expense management practices?
There are any number of financial entities, not just banks, even non-banks also, fintech companies. They are all in this space today to offer the best solutions for optimizing the cash usage by the enterprises. And the regulatory approach will be to encourage that. There it will only see that both the parties, because always there are 2 parties, there is a fairness in dealing. It should not be totally advantageous to one side of the segment only. That's the approach.
So you'll give a free hand, but you'll see to it that you balance the equation which is equal to both sides. Understood. All right, now let's extend this discussion to include an emerging API economy. Now, in a fast-paced economy like India, companies need to scale quickly and deploy innovative business models to maximize value and minimize costs. Now, in that context, integrating platforms and apps into a streamlined interface for those who consume that data, that, as we have been talking about, it transforms to insight, and that becomes paramount. How do you translate data into insight? So my question to the CFOs gathered here is, how does your company or industry view APIs as a source of strategic value in today's digital economy?
The way I look at is, the authenticity of whatever information is getting shared, because there is so many situations that documents getting produced may not be actually right. So if there is a proper integration, so one is that things can flow directly. Secondly, things can get verified. And obviously, it saves a lot of time, energy, things automatically flowing, information getting shared. So to me, most important is the authenticity, and second is the efficiency in the processes through APIs. So very, very useful, APIs to have among the organization.
Let's get the Amex perspective.
A company which specializes in connecting disparate businesses, and there are such startups in India now and around the world, who just create a labyrinth of APIs and connect disparate businesses so that data can flow from one to another.
So a whole new generation of businesses.
Absolutely. It's out there, and some of these are growing really fast.
And no discussion about a cashless economy can be complete without a mention of blockchain. Now, so the big question is, how does industry view a blockchain payment future?
The new act has come up recently, which is called IBBI, Insolvency and Bankruptcy Code, 2016, where they have strongly recommended to create a platform called Information Utility, IU, where the government is going to give the mandate to all the banks to upload the whole data of the lenders into that system, and so also the buyers to upload the invoices into the system, so that matching concept can be done at the front end. That government is coming up with the initiatives in a platform, maybe an API through, which is going to be in future. So where everybody can be uploaded those data, whether it is customers or buyers or maybe government and loans and anything, so that later on one can get the information from the utility easily available, so that there won't be any dispute.
Let me get the Amex perspective on this. What is the implication of India using blockchain for cross-border payments?
Blockchain is a complex network of multiple ledgers of buyers and sellers who need to be participating in it together at the same time. So is it an exciting technology? Absolutely. Will it facilitate cross-border payments and even domestic payments? Absolutely.
Yeah, okay.
So yes, blockchain is in many ways will change the foundation of how buyers and sellers will transact.
Well, on that note, I think we can wrap up this discussion. I would now like to invite Mr. R. Gandhi, former Deputy Governor of the Reserve Bank of India, to deliver the valedictory address. A loud round of applause for the gentleman. Thank you so much.
Payment revolution that has been sweeping all over the world, that right from Manoj's presentation onwards, everybody is re-emphasizing. Let me also emphasize that part. That is completely changing the landscape across the world, not just the developed world, even in the emerging and developing economies as well, or rather more specifically in the developing and emerging markets. And India is a leader in that respect. The banks and non-banks, they are all competing with one another to provide such services for the enterprises. And the new regulatory standards are also helping the system. In India, of course, for the enterprise more specifically, we have that ECS debit, ECS credit, the centralized ECS, then NEFT, RTGS. So these kind of varieties of ways in which the enterprises can utilize appropriate payment system. And in recent times, two more systems have come. One is the Bharat bill payment system, and the latest one, the trade receivable and discounting system. And this trade receivable and discounting system, a little more I would like to explain. Even during Saro's presentation, she made a presentation about how Amex is providing, kind of shifting the burden of or the risk from the supplier to Amex itself in terms of payment. Now coming to blockchain. Blockchain, yes, as I said, that quite a lot of interest is there around, and basically blockchain is nothing but a distributed ledger where transactions get recorded across the network in any number of computer nodes or server nodes, and it cannot be modified easily. incontrovertible proof of transactions. That is what's the ultimate aim of the blockchain technology. Let us hope that the researchers and others will find a good way of using this technology in the coming years. Thank you very much.
On that note, we'll conclude this unique thought leadership forum on reimagining corporate payments. It's been a very interesting session of engaging insights from both CFOs and policy makers. And I'd like to thank all of them for sharing their perspectives on the topic. And thank you to the viewers for tuning in to this special presentation. Keep watching CNBC TV 18.